Welcome to the channel. Please consider subscribing so that you get notified of new videos when we post. Give this video a thumbs up to just motivate us to continue making videos. Are you also into trading? Tell us in the comments section below which kind of trader you are. Now, onto today's video. Forex tends to be a financial topic that seems appealing but out of reach for many. Why? Unless you travel in certain financial circles, then you don't really hear much about it or the experiences of many people who actually utilize it successfully to make money. While there's been a fall in transactions on Forex, still, they continue to attract a large user base. Today we'll talk about why that is. The appeal of Forex, risks and types of trading accounts. The appeal of Forex. Despite a global fall in transactions, Forex attracts a large user base because the bar for entry remains low, around $25, with free training to do so. It remains a viable alternative for traders because all you need is an internet connection and the necessary knowledge to start trading. Another factor that makes Forex appealing is the potential to make a large profit on a relatively small investment. What are the risks? With so many pros inherent with Forex trading, there are some risks associated with it that one must consider. One must make sure that their internet connection and computer are running smoothly at all times. Of course, we all know things happen, servers shut down, and our laptops' PCs mysteriously freeze or shut down depending on the current activities. This can affect transactions in process, so be aware that the things can happen during the course of a trade. With the bar of entry so low and the potential to make great money high, it makes sense that some may get into this with eyes bigger than their wallet can manage. Be sure to utilize the proper stop-loss tools to minimize risk. Since ongoing issues within foreign and domestic economies can change in an instant, it is important to remain abreast of all issues and how they can possibly affect your standing on the foreign exchange market. There are also risk-free practice accounts that allow you to practice without losing your own money. Once you've tested the demo account, then you can move on to a funded account to get started. Trading is one of the ways through which companies and individuals amass a lot of money. Gone are the days when the trading community was strictly dominated by the multinational banks and large financial institutions. Today, an individual holds a lot of power in the trading community if he has the ability to trade on a variety of assets, currency, stock, options and the commodity market. Anyone can trade on the global market. Different countries in the world have their own respective currencies, and these currencies are traded and exchanged, which lead to fluctuation in exchange rate or currency pairs, thus creating an opening for profit. Pros. The Forex market is always on 24 hours a day, 7 days a week. It doesn't matter your location or time. With an internet connection and a computer, you can log in at any point in time to resume trading. Leverage simply means borrowing money needed to make a trade, and in Forex terms, this money is borrowed from the broker. This is one huge advantage of the Forex market, whereby brokers allow you to trade up to 2% of the overall contract size, 51. Compared to stock market, 2:1. You can use the small account to trade large sizes, where wins can be quite large, and you only need a small capital to obtain it. It's scalable. You can trade micro lots, mini lots and standard lots, which give you control over position sizing and capital exposure. With this feature, a trader can be able to control and limit risk depending on the trading account. There are no commissions. Well, you do pay, but you pay in spreads costs, which is dependent on how much you trade per pip and the currency pair traded. The software and data provided are free. You don't have to pay a dime. All you have to do is log on to your broker's website and download the software. The charts are displayed immediately once you log in. Cons. You'll experience huge losses when you have no clue about capital exposure and how to calculate leverage. Smart traders go into trading with just 2% of the initial capital and no more than that. Brokers give you high leverages and insane margin levels don't necessarily mean you should dive in with it. As an individual trader, you face a lot of competitions, especially from the large financial institutions with highly trained traders and millions of dollars invested in the best software and hardware for trading. Just because the Forex market is available for 24 hours a day doesn't really mean you should trade all day. The market moves differently throughout the day. There are only few peak hours whereby the moves are large and worth your time trading. There is no centralized exchange house, unlike the stock market. The broker is the one that acts as the exchange, which automatically makes him the market maker. Risk. There are a variety of risks involved when it comes to trading assets, stocks, bonds or currency. And it's also your obligation to understand these risks that come with Forex trading before proceeding with your first trade. One of the largest risks in Forex trading is leverages. Most Forex brokers permit you to hold a certain of money in your account, but then leverage that amount by over 200 times. This could bring in a lot of profit if you are on the winning side, but on the other, an overwhelming loss if you should find yourself on the losing end. The best way to stay clear of this is to use some of the feature built in on the trading software. An example is the stop loss features and negative balances. Trading on margin also comes with its own high level of risk, which any smart trader should avoid. Always evaluate your capital and the number of risks you are willing to take when trading. Never go into Forex trading with an amount you can't afford to lose. Again, have you been trading Bitcoin or the other coins? Leave your comments in the comments section below. Hit the like button and subscribe for future videos. That's it for today's video. Catch you in the next video.